major news or major no news potentially concerning sterling and UK markets as well. Talk in the Sun newspaper that Boris Johnson's prepared to walk away, excuse me, walk away from a deal or walk away today with no deal has hit sterling quite significantly. But dollars come back as well across the board. So we got a better dollar this morning into the second week of December after some significant moves down and a very weak sterling. So if we look at cable in particular, this is the 1 hour chart on cable. We closed down on Friday after the NFP event. Obviously, NFP, I'm sure you're obviously all aware now, big miss at 245,000 for the headline numbers. We moved down into close on Friday with some profit taken, and then we've had this obviously big move down under the 200-hour moving average RS1 today at 133.80. We've given up 133 and we're into S3, and we've already spiked below that to lows today at 132.25 for sterling. Obviously, these support and resistance levels a little bit irrelevant when we get some big fundamental news like the gossip that's swirling. The other thing that's hung on sterling is Barnier, although talks resumed yesterday, and there was talk of even Reuters were breaking some news yesterday that there was some agreement on fisheries. That obviously hasn't happened. And Johnson and von Leyen did speak extensively on the phone to put the politics, which is what's holding all this up, into position on this thing, this deal or this lack of trade deal by the looks of things. But the economic situation is going to be critical potentially for both sides, more so for the UK in my humble opinion, but it doesn't really matter what I think. But anyway, sterling remains to the downside today and dollars come back. Good morning, Khaled. Hope you're well, my friend. Anything you want to have a look at in particular? Let me know and we'll have a look at it. Otherwise, we'll just run through the major news from the weekend and the major charts. So obviously over the weekend, obviously the Brexit talks were front and foremost, but obviously things have moved on significantly this morning. So Friday's close, I say we closed, equity markets closed at all-time highs. The S&P 500 closed at 3699, just 1 point short of 3,700. Remember, that was an end of year target about 6 weeks ago, I think, that Goldman Sachs came up with. So very strong close for equity markets. A bit cooler for futures this morning so far. Also, 10-year yield closed up very strongly at 9690. So again, another strong close for yield. So again, there's some risk still there in the market as far as market participants are concerned. Gold held over the 1830 for close on Friday, and oil held over $46. That's down quite significantly today on the weekend news of rising COVID cases again, rising hospitalizations and rising death rates, I'm afraid. Very sad news indeed. So we got a bit of weakness in the equity markets, and dollars come back, getting a safe haven bit of a bid again, and yen's up as well. So key news, or most key news economic wise over the weekend, there's been this morning's massive beat for Chinese exports. So Chinese exports came in at 21.1% better than much better than expected. It was expected to bounce quite significantly to 12% for November, but it came in at 21.1%, the best monthly performance since February 2018. So very, very significant, a big return for Chinese exports, obviously driven by exports of PPE, but also electronics and electrical goods being driven by lots of these lockdowns and people working from home. So and even small items like toasters and microwaves all being heavily in demand, and the manufacturers in China cashing in on that quite nicely as well. Trade balance very, very significantly up, 775 billion US dollars for that. Now then, I can't see my questions on Facebook. That's the other problem, is it? Let's just bring that up here, and I'll see if I can see some questions under here. There we go. I might be able to trail it from there because I can't see it from our Restream site. So I'll toggle between the two. So anyway, enough of me. Let's get the charts up. here. So this is sterling. As I said earlier, we're down very significantly from these all-time highs we'd had last week. Remember, euro dollar was at a 32-month high on Friday, and again we've moved down. So sterling giving up the ghost a bit, and certainly dollar very much back. And here you can see sterling. The dollar also back against the euro here. There we go. So again, another one. As I say, the NFP number, big miss for the headline. So before we'd rallied earlier in the day on Friday to these 33 month highs up here, 121.75. Closed on profit taking into the week end here around 121.25, and then we've tanked down this morning into S1 at 120.95. So under the key 121 handle for the euro. If we go to the daily time frame, you can see this is a very strong move we've had. So over the big psychological 120 line in the sand, that's the key one lots of guys were looking for. Also breached 121, but moving down so far today under the 20-hour moving average there late on Friday, and continue to unwind and decline. And there you can see the moving averages. The moving averages all nicely aligned there, the 20, the 9, and the 5 there. That's the green line, the yellow line, the blue line, all nicely aligned. Moving down, big move down here at between 10 and 11 here, server time, under 121, under S1. S2 today sits down there at 120.68 zone. Stochastics already into an oversold area. MACD's trending lower, looking negative. Big last histogram there, and RSI in fact has actually dipped into the oversold zone as well. So maybe some support around this S1 level as we go forward on the 1 hour time frame. But euro down so far. Emmanuel, whoa, to you too as well, my friend. Anything you want to have a look at? Any asset, any forex pair? Please let me know. Usman's asking, I wanted to know how to start. Usman, go to our website. Go to hotforex.com, www.hotforex.com. Look at our education page. It's all free. Download it and send me an email, send some question, come onto our support desk. Our support guys will be able to help you if you're on the website, how to get started. So welcome, my friend. Emmanuel, that's very pleasant comment. Okay. So yeah, not many other comments here. I'm not sure I'm getting all the questions that are coming through from Facebook. Now then, Raja, my friend, hello. Long time no speak, my friend. Hope you're well. Hope you had a good weekend. Aussie CAD, my friend's asking. Canadian dollar, Aussie come back a bit. Canadian dollar come under a bit of pressure. But let's have a look at Aussie CAD for Raja. Let's have a look at. I haven't got that on this particular setup. We'll go to my Aussie crosses. 1 hour time frame for the Aussie CAD, he said. So this is the Aussie. So this is the Aussie CAD on the daily time frame, Raja, and we'll see what's happened. So we've rallied quite nicely during November. This is the break of the 20-day moving average here on the 3rd of November. So we rallied quite nicely. We rallied into 95.70s, and then we got stuck. Okay, so there's a key Fibonacci level there, 61.8, which we stuck at. Then we come down and we broke very aggressively here, back down through the 20-day moving average. So that's a fairly big short candle there on Friday as the Aussie weakened. The CAD got some lift from the positive oil news. So we'd rallied quite well. Let's finish the story. So we'd rallied quite well, stalled, and then broke down. So big down day on Friday, under the 20-day moving average, under the 50-day moving average. And we're down again today into daily S1 at the moment at .9460. So big move down. That Fibonacci level is based on this weekly move here, this weekly compression here, this weekly move down we had here. But anyway, let's take it back to the 1 hour time frame, which is what you're interested in. So again, this was the break on close on Friday. The 1 hour had already indicated it was running out of steam. See how that top there, that 95? So the 1 hour was showing some weakness here on the 3rd, in fact, before Friday's close. So Thursday was looking weak, tracked down into close, and then moved down significantly into Friday's close. And again, we got nicely aligned moving average. So we got the 200, the 50 crossed the 200 here on Friday. So we were tracking lower, went sideways this morning, and then we gone down again. So this remains weak. It's under the MACD. RSI is 20, so it's oversold. But we're under pivot point. We're at S1, so we may find some support here. But we've had a weak 3 hours start to the Aussie CAD, so Australian dollar. As the CAD came back. Remember, the Canadian dollar perked up on Friday as well. And you see here quite nicely against the Australian dollar because there's some positive Canadian jobs news on Friday. Strong fiscal stimulus from the Canadian government as well last week. So this big rally that we've seen on the daily time, let's go back to the daily time, sort of turned on its head at the end of last week, and very much so on Friday's jobs news from the Canadian dollar. The Canadian dollar came back to life. Aussie coincidentally weakening as well. So Aussie CAD to the downside here intraday. S1 sits there where we've already tested this morning at 94.60, and then S2 sits below there at 94.31 for dollar CAD on the 1 hour. Raj, my friend. Raj is also asking, all good, hope you're okay. I'm very well, thank you, my friend. I hope everybody stay safe, everybody, guys. This is, health and our families are by far the most important thing, even more important than trading. Okay, took a buy earlier, though it was forming a cup and handle pattern, but because testing resistance on daily, so it dipped down. Win some, lose some, indeed. Absolutely, that's a great attitude, Raji. You think you see something, it fits with your mindset, it fits with your time frame. But, for me, that's very much, a weakening pair that's continuing to move down. Significant move down as well. From what time? Yeah, so as a European session, so a very typical Monday morning there. Nothing going on in the Asian session, even though the Australian dollar, the prime session. But London opens and we're down, and then down again, and into this key S1 level 94. So Aussie moving down against the CAD and continue to weaken, but some support found in this hour and last hour to this S1 level here, 94.30. Winnie, my friend, how are you? How's your cars? I love your car posts on Facebook, my friend. Those always makes me smile. Indeed, my friend, long time no see. I want to have a look at US oil on the daily. Are we bullish or bearish? Personally, looking at a short. Well, we had a big move up, remember, remember markets move on anticipation, and although, they shouldn't, they do, they're speculative, by very nature. So the news was fairly positive out of, the noises, should I say, not the news, but the noises out of OPEC. And remember, the OPEC plus countries as well, significantly Russia, that they were looking to, before the meeting, it was looking like they were going to continue the cap, keep it, not increase production. But yet last week, they talked about an increase of 500,000 or 500,000 barrels a day. In the, let's just have a look at the daily. You said, let's look at the commodities then. Let's look at on this chart there. So let me just bring up your, where is it? So it's always a bit of a mess on this one. US oil daily. All right, let me talk the talk for a minute, and I'll come to you on the daily time frame. Didn't you say? Yeah. So we breached 45, which is a key level. It's not actually on this chart, but $45. We've got it's a 5, so it's a round significant number. But we'd also breached $46 last week. So we'd had this big rally. Let me just put some. There we go. So we had this big rally, huge rally for November. We were all the way down here, remember, at the beginning of November. Big worry over the COVID, demand collapsing, and there was no talk about reducing their production. So demand was collapsing, supply was still high. So we went all the way down here to under $34 on the first trading day of November, and we finished November all the way up here at $45. So it had a huge rally. You would expect some profit taking at this levels, but we started December quite positively because the meeting last week talked about increasing production by 500,000 barrels a day. and it was sort of on the back of the pandemic, the vaccine news, lifting sentiment, lifting a rollout for during Q1 21. So certainly some positive news, obviously out of Asia still. China news I mentioned earlier, lifting potential demand. So we rallied and held 46, but for me, really, Raynard, there's no sign of that weakening at the moment. It has got a bit stretched, obviously, but look at the RSI there, my friend. This is a daily on US oil. RSI hasn't gone into an overbought situation. We've got a bit spiky here. We went to 71. We've dipped down. We're now sort of moving down at 64, but there's still that could easily tick back up again. We're consolidating at highs. So for me, I'd just watch that $45 handle. It's a round psychological number. We may tick down into that, but that's really where we are. We're still aligned here. The moving average is sort of from going sideways here through sort of September and airing to the downside October. We rally significantly for November. So the November action has realigned our moving averages. So we got the Bollinger Bands now pointing up quite nicely. The angle's not too steep, but steepening, and it's flattened out over the last few days. We got 20, 50, and 200 still. So big move up. 45 I'd watch. The pivot here, this is obviously extended pivot there, 41.70. That if we go to the higher time frame for some sort of indication, that's still relatively strong. So we've had a positive 1, 2, 3, 4, 5 week run. May go on, but it looks like we're petering out. We see how we have a strong run and then the candles compress. So it's obviously only first day of the week. And we can't make any decision so far this week on that, but certainly last week was much smaller than the previous 4-week run, wasn't it? So we may be compressing here, but still remains bid. The 50-week moving average is all the way down there at 41.89. But obviously the next big line in the sand here on this weekly chart is that 50 level R1 on the weekly basis, all the way up there at $50. Big psychological area. So we're possibly likely to see a dip, as you say, possibly down to this 45 level. So nothing to actually make to trigger that, to be honest, technically, my friend. So your call on US oil. Probably was the news. Sorry, I don't have a good day. I'm out of the day, but absolutely, Raja. Why not? There's lots of activity already today for a Monday. Lots of pips available and bagged, and go and take the rest of the day off. God's will. Come to our website. Come to hotforex.com, and the support team will help you. But have a look at the education tab as well. There's ebooks, there's videos. Recorded videos, is these live events we do on Facebook and YouTube all the time. There's webinars that we do 3 times a week. Again, live. You can come and join us live and ask questions live in our webinars. They're every Tuesday, Wednesday, and Thursday at 11 a.m. GMT. I don't know where you are in the world. That's why I always quote GMT. So 11 a.m. GMT on Tuesdays and Wednesdays, and they tend to be 12 o'clock on Thursdays. Live analysis tomorrow with Andrea, my colleague, at 11 o'clock GMT tomorrow. So go and look at the markets live in the webinar as well tomorrow. On Wednesday, I'll be looking at how to trade equities and Forex. There's some nuances between trading Forex and trading equities, and we'll look at the new MT5 platform and our new DMA stocks as well, and ETFs on Wednesday. So join me then, Goodswill, if you can, but say come onto the website and see what we go. Roger's asking about gold. Gold held up relatively well on Friday. This is the gold chart on the daily time frame. And see, we had a big shakeout, as you all, I'm sure, are aware, all you gold traders. We plummeted the Friday before last. We went significantly, closed significantly under the 200-day moving average. Looked like we were going to go down. We tested low. We put in a low of 1765, and then we rallied very aggressively during last week. Let me put the what am I trying to do? I'm trying to put the property period separated. Sorry, so let me see where the week ended. So that was the previous Friday. Monday, and then Tuesday, big up candle, and we rallied into the week, topped on Thursday up here at 1847, 1848 area. Now we moved down, sorry, on Friday, I should say, and now we're down a tad today, but still holding 1830. Raj, I don't know what time frame you're interested, my friend, but let's just run through. So the daily is still weak because we haven't closed over the 20-day moving average, which sits there at 1845 now. It was 1850. We've come down a tad today, 1845. So the daily candle needs to close over 1845 if this is going to move higher, or technically have a chance of moving higher according to this particular setup. We got an RSI at 44, and it's really negative, not negative, but neutral, I should say, not really going anywhere. And on here, we got on this particular setup, we got an indicator, the stochastic in the overbought zone. These stochastic may be looking to perhaps roll over, and you see the 20-day moving average has provided a resistance area there at that 1845 zone. So we're down, say, down again today. For 4-hour traders, we've had a nice run. The last move here was this breach of the 20 period moving average here on the 1st of December on the 9th. And again, that just trailed up nicely, closing under the 9 period here on, when was that? That was on Friday, wasn't it? At the close, yeah, and the close on Friday. So a nice run there, nice trending run. That's out of the long position. And now this 4-hour candle, which is yet to conclude, it's just started at 9 o'clock this morning, looks like that's triggering a short position. So from the long trend up there on the 4-hour time frame, nice pips there. So that went from here at 1798 all the way to 1835 for some 3,000 odd pips moves there. Nice move there. That's looking to go short at the moment, but yeah, that candle is yet to complete to signify that that is a moving average cross to go short on the 4-hour time frame. Stochastic's already been over. Oh, it's not over so low. It's at the 50 level, so it's moving down at the moment, yet to move. 1 hour, 1 hour. That big shakeout earlier as the dollars come back significantly. Big move in the dollar this morning. So it's come back, and but we've ran interestingly to the 200 hour. So we found support. So intraday, Raja, gold has support at the this S1 level here, which sits at 1828, and the 200 hour moving average, which sits at 1827. So that $1 gap there, 1828, 1827 is a key support area today. But that 1 hour down candle, which was first signified here on Friday, it went back, but didn't. Then it went up, so it closed out. But actually, you know, if you're on short over the weekend, that's still short, and then it's added to that short position there this morning on that 10 to 11 candle. Next support level is S2 at 1819. So if this breaks, but this is obviously an intraday, quite a strong support level intraday, the 200 hour. But if that breaks, you could now perhaps test or target S2 at 1819. Needs to break back over the pivot point if we're going to go long again here at 1838, or looks possibly to go long. And then we've got resistance at the top of the Bollinger Band at 1845. And then the technical R1 today sits at 1847. So that's a gold market, Raja, my friend, intraday today. So anything else, anybody? Excuse me, I just need a quick drink. And let's go back to the major profiles. As I say, dollars come back quite significantly this morning, and obviously the news is breaking with regard to, or not breaking with regard to, well, will there not be an EU deal? So euro rates hovering at that S1 level. Sterling. Let's have a quick look at cable. Again, it's found some support at this S3 level. So 132.53 has proved so far support the last couple of hours for sterling, but still looking quite weak. All stochastics in this oversold area. MACD still moving down quite significantly, and RSI also oversold at 21. Was a big move, but these technical indicators are a bit somewhat irrelevant when we get these big, these big fundamental news sometimes. But in fact, S3 has actually come into play, just contradicting what I just said there. So there we go. Other big news has been the dollar CAD. We were down here for dollar CAD, 26-month low on Friday at 127.65 zone. So under 129, under 128, and here we were 127.70 zone, 65. 70. 127.70 into close. Again, recovered quite significantly as the dollar's got a bit of a bid this morning, but still on the daily time frame, still trending lower. And so far today, it was first up day in 1, 2, 3, 4, 5. 5 days, and the up days previous to that were very weak as we've continued to unwind. And again, another pair that breached the 20-day moving average at the beginning of November. As oil picked up, the 20-day moving average kept you short, and that's still on the daily time frame remains short and way under the 5, the 9, and the 20 aligned moving average. So again, still trending lower. Dollar CAD on the daily time frame. Aussie had been holding 74 earlier this morning, but the pickup in the dollar and that weakening Aussie we saw when we looked at Aussie CAD earlier has obviously been led by the US dollar itself. And again, another one that's found support at its S3 this morning at 73.73. So big shakeout from 74.26. Big move for Aussie against the dollar. And we're back to but we're still at the moment, interestingly, under the 200-hour moving average at 73.85 as we trade at 73.83. So key next few hours potentially for the Aussie pair as well. What's this on? Hot Forex is that Philippines? It is. Janelle, welcome. Any questions you want, guys? Anything you want to look at, please let me know. And let me just see if they've gotten some of these questions coming through. I can't see them, I think I can. Not entirely sure. Okay, so so it's a stronger dollar, weaker sterling is really the story of Monday. It's not great deal of data today. We've got as far as news is concerned, we got Eurozone Centex index, which I think is out, and I'm not quite sure, and German industrial production, which was much better than expected, as well as another positive for the euro this morning. The German industrial production was a bit not as good as the Chinese trade news, but it was much better than expected. Where am I there? I can't remember the 3.2% month on month. So again, relatively big bounce for the October German industrial news data. As far as the Centex is concerned, we sure what time if that's out already, to be honest. No, that's out at 11:30. Yeah, that came out 11:30, and that was better than expected. Again, it came in at minus 2.7 when markets were expecting minus 11.9. It's quite a volatile number, but it's significantly better than expectations of minus 11.9. And last month, it came out at negative 10.0, so it's coming at negative 2.7. So again, that's in line with the German industrial production data as well, which is better than expected. As far as the week ahead's concerned, we'll be more about these live in our situations anyway, but it's quite a significant week again. We got rate decisions from the Bank of Canada and obviously the ECB as well. And we got minutes from the Bank of England and the financial stability review from the Bank of England as well. But all eyes probably ahead of the top of the shop really is probably the ECB statement about how much extra stimulus they're going to have. We've also got the EU summit of leaders on Thursday evening. And there's obviously the fallout between Hungary and Poland and the rest of the EU with regard to the budget and the financial stability package they're going to put together. So both parties, again, they're playing quite hardball, both Hungary and Poland playing quite hardball on that. So how will that get resolved? Another crux summit for Macron and Merkel. Remember, Mrs. Merkel's coming to the end of her tenure as the German leader this next year. So she'll obviously want to leave in positive situation. But all eyes really on Mrs. Lagarde and the ECB rate, and the Bank of Canada later in the week as well. So if there's no more requests for assets, I'll how we go. Getting spammed again, but never mind. Such is life. So there we go. We'll call it. We'll wrap the session up if there's no more requests for particular assets. If let me just a quick run through what else is going on. Let's see if dollar index is holding up. Yeah, dollar index is holding up, back over 91. So significant recovery for dollar. Equities continues to weaken a bit. We had this record close at 3699 on Friday. This is the futures market. This is the CFD on our USA 500 on the 1 hour time frame. So earlier this morning we were up to 3,705 where the R1 level sits, and then we've weakened since then into the 50-hour moving average at 3678 and under that. Bounced off that, and we got the pivot, the next area of resistance at 3686. So equity sort of weakened and fairly significantly, but then we're sort of trying to trail back, but again under its 20-hour moving average since earlier in the last few hours. MACD moving down, stochastic's been oversold, moving back up a bit now. So again, another one, some key lines in the sand there. We've got the 20-hour moving average there, we've got the pivot point there, we've got the 50 there, and the bottom of the Bollinger Band, and this one there. So some key levels to trade on that S&P 500 move down there. So no more questions to come in, or unless the link's gone or something. That quite often happens. So I'm going to call it a morning. All eyes on Brussels, ladies and gentlemen. Watch what's going on there. And I say a big move for sterling, euro. I know she showed you the euro. Where's euro? Where's my euro? Let's have a look at the euro. So sterling against yen was a big mover down earlier there. We were Friday, we were all the way up there over 140, and here we are under 138 at one point this morning. Again, another one down at S3. Euro pound is a similar sort of move. I've lost it. There we go. We're back over, breached 90 last week and held it quite significantly. So that was really positive for the dollar, the euro against the pound. Then we were over 90.50 this morning and rallied very significantly over 91 as well. So again, euro pound at relative highs at 91.25. So sterling continues to come under pressure this morning. So I'm going to leave it there. We'll leave you with the dollar index showing some life after many down days and back over 91. So take care, everyone. Trade carefully. Big news today, as I say, watch what's going on out of Brussels. So take care. See you all soon. All the best, everyone. Bye-bye.